Morning all. How are we all doing? Morning Pablo, morning David. So I was just looking at Euro Swiss. Somebody in the Telegram group was talking about it. Who's long? Stevie, are you in there? I presume it's Stevie. Steve Reeve. That is, yes, it is. I think. I don't know. I'm not sure which Steve it is. Anyway, I was just going to cover it basically. Euro Swiss longs are risky. Obviously, anything long on Euro is risky. This has got a good chance, to be honest. Very nicely extended on RSI. It's just starting a potential reversal. There is a chance of a push, but it's not really going to be, I don't think, on Euro strength. It's more likely going to be on just nothing happening on the Swiss franc after this 2-day push. So yeah, tricky one. You need to get out of it quick, I think. I'm short on the Euro at the minute on the Euro odd, and I'm struggling with this thing. It's just not going anywhere. It's been a nightmare all week. Just sideways, basically. I got in, and it's just gone, nah. Morning, Diamond. Morning, Johannes. Yeah, just rubbish at the minute. Stuck in it. So I've got that on short. I've got US dollar CAD long. Again, stuck sideways. Been sideways for 4 days now. Not going anywhere. We got no news. This is the trouble. When there's no US news, the market stagnates because the whole world revolves around the US dollar, and when there's no news on it, it just goes dead. We're also coming into summer trading as well. If you're new to trading or you haven't been trading for more than a couple of years, you won't have probably noticed, but summer trading is just laborious. It's so slow. The market has so little liquidity in the summer months. Movements just take forever. It's just annoying, but it's just what it is. I've taken a long on US dollar Swiss this morning as well. That pound Swiss that I got in and out of yesterday, I got out of this pound Swiss. I put it in the Telegram group. I got out of it there because it just wasn't going anywhere, and I just didn't like the look of it. I needed to break above the highs on the hourly. We got that break on the hourly, and it immediately reversed back down and was still sideways. This Swiss franc is really slow, so strong rather. So I'm out of that. But I have taken a US Swiss this morning. Initial position on the M5 reversal alert. So we just got an M5 reversal alert. They just taken out yesterday's low and immediately pushed back up fairly strongly. We've just retested as well. I'm adding a second position up here on M15 when we break up a little bit further basically, and then I've got a third position poised when we break the Asian highs, which is also this little accumulation from yesterday. So very, very tiny little starter position. It's virtually no risk at all. Adding second position in and then third position. So if this works, i.e. if they break these highs, if they break those highs, we'll probably get a little bit of a run up this morning. So I'll make a full-sized position. It works. If it doesn't work, it's going to take me out for like $10 or something. It's nothing. So yeah, I got that on tiny little position, and I've got the DAX short gap fill on at the minute, which is 0.5% in profit. It's on its way, so it's going there. And as you can see, I've been stuck in this US dollar Swiss and this Euro odd. I've been stuck in these, hovering between break even and 1.5-2% drawdown for the week. They're just not I haven't got anywhere. So I've just slightly gone into drawdown on them. I'm on the verge of shutting the things down. I've done 30% this month so far. I'm just fed up with them. But I will give them this session and see where they are at the end of the session. 5 minutes to the open. Pablo, the big moves during October. Yeah. Yeah, so summer trading, May, June, July, and to a certain, May is not too bad actually. It's mainly sort of July and August are the hideous ones, but October it all starts to kick off again. Then we get the Santa rallies. Everything goes mental. Morning, Vinod. Morning, Stevie. Stevie, is that you in the Telegram group that asked about Euro Swiss? Not sure if it's you or a different Steve. News. Sorry, I have to be distracted by a comment. We had retail sales for the pound this morning, which were dramatically positive. Very, very big positive. Need Swiss weakness today, guys. Stuck in a trade. Yeah, so you're in the Euro Swiss, aren't you? Decent figures for the pound. I don't think it'll be enough to bolster the pound. It's a reactionary figure. It's not going to make much difference to the pound, but it's positive, a lot more positive. But we are. Don't forget these figures are month on month. For the last month, we've had nothing but negative news, interest rate rises. Everything has kicked off. April and May, everybody's bills are starting to go up because that's when the price cap in the UK was lifted in April. So everybody's bills are starting to go up now. So these retail sales, I think, are the final flurry of people spending money. No one's going to be able to spend money anymore because we're not going to have any. Because everything's becoming too expensive. So I wouldn't pay too much attention to those, but the pound's had a bit of a positive move. We've got Phil speaking. Phil, I always call him Phil. Phil speaking. 8:30. That's it. No news today. That's nothing more news-wise today. Overnight, obviously we had retail sales. Bank of Canada interest rates 3.7. CPI for the yen 2.5 as expected, so nothing new there. So yeah, nothing else overnight. Euro Swiss caught me with my pants down. Yeah. 0.5% I've got on this. What's the time? 2 minutes to the open. I'm going to put that half in the bank. And then see where we go at the open. That's good timing. A few crickets starting to come in, I just heard. So I just took that off at 0.5% in case we get a rally. So looking at the DAX, from a daily perspective, we had a big old push down and pull back. Yes, I made a killing yesterday on the DAX. I think you probably saw on the P&L. Did 3% yesterday. I think all of it was on the DAX, if not 80 to 90% of it was on the DAX. It was just textbook yesterday. It just traded so beautifully, moved so nice. It's just you could buy every dip yesterday, and it just worked. Everything worked. It just all worked basically yesterday. It's like I say, you get these days where it all just works. You get days where it confuses the hell out of you, whipsaws you to death. You just got to ride them when you get them, basically, and milk it while you can. But yeah, we had a big push down yesterday. So I was looking for a bit of a pullback. And if remember, I said yesterday I was looking for a pullback into yesterday's propulsion. So what we normally get after a day like that is a propulsion move back up. Not a propulsion move, but a fast retracement into that candle. And then depending on where we are in the structure cycle, we then will get a continuation one way or the other. So we got it yesterday. We got a pullback. Didn't quite get as far as I would like it to have got yesterday. But yeah, it's moving in the right direction. So yeah, fairly good moves yesterday as far as a pullback is concerned. So we're open now for more movement downwards on the DAX. So market structure holding very, very nicely. I think we're now ready for continuation leg down from here. So be looking for shorts basically. So initially that gap fill. But obviously just got out of that at the open, because obviously the open is the initial cash open where they just dump all the money into the market, dump all their positions into the market. So you get movement either way. So just protecting that 0.5%. But looking for a continuation gap fill. So I'm going to put a stop under that last low there. If we get a continuation drop, only looking to get down to here, but it'd be another 0.5%. That'll be me pretty much done. Could you share the ADR indicator on the group? It's not free. You go and buy it. It's on the marketplace. Link in the pinned message on the Telegram group if you want it. There are other ADR indicators out there. There are some freebies, but they're not. They don't work in the same way as this one, and they don't give you all the levels. So, so that's DAX. Looking at the Nasdaq, we had similar-ish day. We ended up with a spinning top on the Nas, coming off the lows. S&P, same sort of thing, and the Dow. Similar sorts of moves as well. Dow's obviously got a little bit more of a drop on it than the other US indices, but similar moves. Didn't get quite as much retracement on those. So yeah, but potential today. One or two things I think is going to play out this morning. We are either going to come and retest this wick. So we've got this propulsion gap. You can't really see an awful lot on this chart. It's a bit tricky to see. We got this propulsion gap to aim for, which I think we may well come up and test. So we might get a move up first before we get a move down today. So that's kind of what I'm watching the open for, to see what happens. Because we do like to do a decent retest, and these wicks here are a very good support resistance level, and they just happen to coincide with where we're kind of potentially aiming for. So up to there and then potentially down, or we're not going to bother doing that and we're just going to start our down move. But either way, bearish. So we'll keep an eye on that. ADRs today. So yeah, Pablo, if you want ADR, you can get the ADR dashboard. If you don't, the indicator basically draws ADR on the chart, and the extension levels and percentage chances of it getting to them. The ADR dash will monitor everything for you and alert you when the ADR is hit. So for me personally, the ADR dash is more valuable than the indicator, but up to you, or both, whatever. So yeah, ADRs today, there aren't any. We got quite a few ADR hits yesterday. Swissies again on the ADR. So I think we got a good chance on the Swiss franc pairs of a pullback today. So I've got, I say, this initial long position just started on the US dollar Swiss, but it's tiny. All the Swiss francs, obviously, we've had this massive 2-day drop, 3-day drop in some cases, depending on the currency. The CAD and the US dollar have got 3-day drop, the others have got 2s. So big, strong push down. The problem with the US dollar Swiss is trying to pick a bottom is virtually impossible on this thing, because the run-up was just so strong. There was no market structure in the run-up at all. It was just a straight line. So you can't pick anywhere that we're potentially going to get a bounce from. So it really is a bit of a needle in a haystack trying to get into this thing long. But obviously 4-hour RSI, we're very extended. So we are at the point now where we've had a lot of sellers, and a lot of these guys will be looking to profit take on these moves. So any of the speculative traders that jumped in on this massive buy rally of the Swiss franc, they'll all be looking to start taking some profit, I would imagine, down here. So the other option is obviously this is just a profit take move on the run up. So obviously we got the massive run up and they're profit taking now and looking for next leg up. So either way, we're either going to get that pullback and drop, or we're going to get the pullback continuation move. So the 24.72 is the zone typically in a trend where we're looking for the bounces. If it's a reversal, obviously we'd be looking for that. Either way, I'm long. Big flurry of orders came in there on the DAX. So opening range is very tight this morning. We just retested those highs. So watch what happens on this candle. Let's see if we get push out the highs. 52% chance of a 50 basis point move on the Eurozone. In July versus 44% on Thursday. So this is just again, I hate it when they do this. They're just reconfirming stuff we already know. We know it's going up. We know the rates are going up. They've said that. We know. We don't need to know the percentage chance of it happening. It's just milking it. But anyway. So we've rejected the highs on the DAX. Might try a second position under the lows. So one entry there, one entry under that low, and then, as I say, I'm just looking initially for the gap fill today. I think we could well get a very big move down today, but obviously initially I'm just looking to get a little bit of that move. I was toying with the idea of selling up at these highs as well. I didn't, but I almost hit the button on my funded account. Wish I had, because I'd be out of that by now. Never mind. Okay, so going to get into one. It's going to let me in. Got 1 minute left on this candle. Good rejection though. Not a lot of sellers coming in. But obviously there's no buyers at the minute, as you can see. So we just need a little flurry of sell orders and that'll give that a kick down. Quiet open. We'll keep an eye on that. So yeah, ADR's nothing. Obviously the weeklies, yeah, I mean the weeklies are obvious. It's the Swiss franc this week. All about the Swissy. Few other hits on the weeklies. Obviously, we're on Friday, so these kind of are irrelevant. But obviously, you can see the Swiss franc has had a very, very, very big rally this week. From a monthly perspective, we got things like the Swiss yen up to 150. We're on the 20th of the month. We've still got a week and a bit trading left. So looking at the Swiss yen, obviously very, very strong run up. We've got a weak yen, we've got a strong Swissy, so this is the perfect storm at the moment. Difficult to tell a direction on this. The Swiss franc, obviously, this is the first real signs of any life we've had from the Swissy, and the yen, we've had sort of bursts of strength coming through, but no sustained strength, and we're not expecting sustained strength on the yen at the moment. We will do it, but not at the moment. So I think this is probably more of a long than a short overall, but I just don't really want to get into yens at the minute because I'm not sure exactly what's happening with the yen. It seems that they can flip that on a dime at the moment, and it can go either way. So I don't really want to get stuck the wrong side of it when it does go into a rally, because when it goes into a rally, it flies. So kind of steering clear of that one. But yeah, probably going to be a pullback coming in the next few days, and then potentially it could just rally on. Obviously it could drop if the yen powers up, so don't know. We are extended on the 4 hour. We're extended 150% on its normal weekly range, so for a mean reversion trade, it's in spot on perfect position at the moment for a short. Just about to get a reverse alert on M15. M5 you just had one, which is retesting right now. This candle is about to give you a oh no, it's already retested. It depends on how many candles you've got on your retest arrow, but I've got mine set to 1 at the moment. But if you set it to 2 or 3, that's your retest. This one here. So good entry short. Probably wait for M15, bit of confirmation on that. But yeah, extended on the hourly yesterday. We've just come up and taken out yesterday's high. We've also come up and we've just taken out the Asian high. So yeah, potentially good short opportunity there. Haven't got into that. So we're just running an inside bar at the moment on the opening range. Not going anywhere. Few buyers coming in, but not a lot. Just getting the odd flurry and then quiet. So the way you read this is you see all these buyers coming in and the candle pushing up, obviously bullish, as you'd expect. People are buying, so the candle's going to go up. It's what happens when this goes quiet which gives you the indication as to what's happening next. So if this continues to push up when there's no buyers in the market, you know you've got a fairly strong market. If this pushes up, in the case of the candle before it, and then it retraces all the way back down, it means there's a load of sellers. So there is a load of people bought the market and the sellers went nope. So the buyers will eventually start to run out of steam and then puke on their positions and we drop. If it continues to push up when there's no buyers coming in, it shows there's no sellers in the market, and all you need is a small buying rally for it to fly. So it just gives you an indication of whether there's more buyers or sellers in the market by seeing whether this is loud or quiet and seeing what happens to the candle. And when this is quiet, what happens to the candle is more telling a lot of the time than when you see this. Obviously, if there's a load of buying going in, you expect it to go up. Of course it's going to go up. If it doesn't go up when there's a load of buyers coming in, you know there's a hell of a lot of sellers in the market. So it's really good for giving you that little indication. I'm just going to see if we get this break, and then we'll have a look at the FX pairs. So if we do get this break, I want to see what happens up at these highs. Looking for signs of rejection at the highs. Okay, so we've got the break. So there's your opening range breakout. So just watching here. See if we run out of Run out of buy. So this is a good indication. Obviously, this is coming down while there's people buying, which means we got a lot more sellers in the market. Yeah, this is green all the time, and this is not going up. That's divergence. So you got buyers and price coming down. It's divergence. So it just gives you an idea of what's going on. So I'm looking basically for short opportunities today. So I'm not going to buy this opening range break. So you can if you want to. Obviously it's an opening range breakout, so we'd be looking for that kind of movement for bullish price action. What I'm waiting for is us to do that retracement. I'm just going to clear this chart. I'm just going to clear all my charts off because this is just a mess at the minute. Got way too many lines from way too many instruments. So what I'm looking for is these highs here and this high here. That zone. So I'm looking for us to push up into that zone there. And that's where I want to be a seller. So I'm going to let this run. I think there's much more downside momentum available. So while you can buy this up to there, obviously at any moment this could turn around. We've got the gap to fill. We're in a bear market. We've had a massively strong bearish candle, and I'm basically assuming we are retracing the bear candle at the moment, ready to start the next leg down. So that's my stance. It's bearish, so I don't really want to be longing it. So sticking an alert up there. Let me know when we get there. Right, just cancel those pending orders off. Right, so let's have a look at FX. So RSI extensions on the hourly. Sorry, the 4 hourly. We've got the US dollar Swiss. As I said, I've taken a long starter position on this morning on the M5 reversal alert, which is just retested nicely. M15, we've had the reverse alert as well. I was toying with the idea of adding a second position in there, but I thought it's a bit too close. So adding a little bit higher, which is basically a break of where we closed yesterday. So it's a break of yesterday's close. And then third position is going to be a break of that accumulation and the Asian high. So there will be my 3 positions to get into. Looking for a long. It's a very small position, so very, very tiny little risk, because I'm not sure about this Swiss franc. I still think the Swiss franc could potentially power up. It's had 2 really strong days, so there is a good chance we're going to get more movement on the Swissy. So from the 4 hour perspective, obviously we're very nicely extended and embedded. We have been for the last 4 candles now. We're down at a potential accumulation area here. So where we got this this run up, we started to flag a little bit here, and then we pushed up into this area and this area of support here. So this zone is kind of your accumulation. We had a little bit of price discovery to the upside and the downside, but that's where the main accumulation was, and that's where we sat. So looking basically for the buyers that started this next leg and stepped in and said, nope, we're going higher, looking for them to add to their positions here. So that's what I'm basically looking for, a push. And obviously we're in the 72-24 zone, which is where on a trend we tend to get the bounces. And we've got lovely propulsion gap targets above, where the markets likely want to come back and sellers start adding to their positions. So these act as magnets for price. So we should get some upward movement, and there's going to be a pullback on this potentially, or this is going to be the reversal and it's just going to go. So either way I'm long. So US dollar Swiss, in that one, nicely extended below the 80, just where I'd like to see it, but I'm not sure on this Swiss franc movement. This is very, very, very strong from the Swiss. So, as I say, small starter position. If this drops down and stops me out, it's going to cost me next to nothing. But it's worth trying to build a position long on it, I think. Pound Swiss, I looked at getting into yesterday. I got out of it yesterday because the Swiss franc was strong. I just didn't like the look of it. It's just not going anywhere. So I got out of it. I still think it's potentially got some legs, only because we've pushed down so far. It's due a pullback, but it's the pound, and we're in a beautiful range. We've got this lovely support area down here that we're in. The reason I took the trade was because of the support bounce from this area, and I was looking to trade it back up either into those highs or into these highs here. But it's the pound, and we've just got negative after negative after negative coming out about the pound, and that Swiss franc 2-day push is just, if we don't get any strength off the pound, off of those retail figures, which we're getting a little bit, not a lot, and the Swissy does decide to power up again, this thing's just going to disappear at the bottom. And I do not want to be long on a pound pair in an economic stance that it's in at the moment with a strong Swiss franc. And if this is going to become the new safe haven, you ain't going to stop. So you just don't want to be the wrong side of it. So I got out of it. Hasn't gone anywhere since I got out. So I said yesterday, if you remember, I put it in the Telegram group, I was looking for a break of this double top here, that high and that high. We rejected it, and I basically exited the position. Then we broke it, and I was like, oh, typical, just as I've exited, it's broken, and then it came back down again, and we haven't gone anywhere. So again, we still haven't broken that double top, and we basically tapped straight into resistance and rejected. So this is just much more bearish looking to me than bullish. So exited. Euro Swiss, same thing. Euro Swiss hard to go long on. We've got this massive propulsion gap there, and to be honest, this really is the propulsion gap, because we haven't stopped until we got down to there, and we've basically pushed back up into there. So I would class this whole thing as a propulsion cap. This is an ADR. Yeah, this is an ADR move basically in 3 hours. High probability there's a lot of people trapped on the wrong side. I say people, institutions trapped on the wrong side, which will want to come and correct those positions. The algorithms will want to try and push it back into there. Whether they can or not is going to be dependent, again, on the Swiss franc. The euro is in the same position as the pound. Doesn't matter what you do with your interest rates, euro, you're stuffed, you're still going down. So, I don't hold out much hope for it. So if you are in this long, you want to be doubling down here and trying to get some aggressive positions on, and hope we get a couple of hours run up, because that area there is going to cause trouble, I think. Failing that, we've got a couple of other spots to aim for coming back up here. So we've got this area here, which is bang in the middle of there, which is exactly where I would expect it to go to on a pullback before a drop. So it's whether or not the euro can bolster any strength. We've got no news today to do that. It's Friday, which is typically a weak trading day. It's not the end of the month, so there's no volume going to come in on the bankers trying to balance their books for profit targets. So unfortunately, it's just not got a lot going for it at the moment. But market can do what it wants, so we'll see. The only thing you got going for you on this is the fact that we've had 2 Swiss franc days like that. Quite likely the market's run out of steam. There's no more Swiss franc transactions to do. It hasn't gone out the gates in London, which is good, because that's what it's done. It's gone out the gates in New York, and it went out the gates in London. We haven't done that today. Whether or not we can push back or not, who knows. Swiss yen, same thing. Swiss yen obviously is the opposite because it's the Swiss franc first. So Swiss franc long. Just see what level that is I've drawn. It's an old level. This chart could do with a bit of a clear up as well. Let's move that up to there. So looking for this area here. Swiss yen on the 4 hour obviously is also extended on this Swiss franc run up. We've run up back into the 24. As I say, with the yens, I'm really undecided on the yen pairs at the moment. I'm more bullish everything against yen at the minute, because I think the yen, they're not ready to power up. They announced more asset purchase, bond purchase, everything, and they've bought more of the yen basically. What the Bank of Japan has been doing is basically buying yen. It's been selling stuff to buy its own currency. When you've got a country buying its own currency in such a rate, i.e. they're buying it to try and bolster the yen, and the yen is dropping, as obviously everything's going up against the yen, which means the yen is dropping, it doesn't bode well, does it? They're buying so much yen, i.e. holding their own currency, and the currency is still weakening, that they're just buying themselves into a hideous position, which is getting worse and worse and worse. They have got a plan to get out of the problem, but they're still doing it. Therefore, I'm bearish yen. So I still think we've got positive upside on the yen, but this Swiss franc, I think, is a temporary move, and we've had a little bit of strength coming through on the yen. So it's very difficult to pick a direction on this one. I think there are better yen pairs to trade, US dollar yen, namely, or the CAD yen. So this one, I wouldn't really want to be taking shorts on it, because I don't think we're going to get a weak Swiss franc. I think we're just going to go neutral, strong, neutral, strong. Yen, we are weak on. So in theory, this thing could just continue to push up. So I don't want to be shorting it there. I'd rather be waiting for a pullback into here somewhere, down there or down there, and look for a bounce. So right now, it's potentially a short, but I think that's more likely going to do that. So I would really be looking for shorts on it at the moment, but it will probably come down. Had a reversal on it, just don't expect it to drop too far, but it's definitely shortable. Well, it's just not going to be a long-term one. And the CAD Swiss. Stephen, my break-even is just below the trouble spot you mentioned. Got two aggressive trades down low on the Euro Swiss, so hopefully I can get out before the end of the day. Don't fancy holding over the weekend. Yeah, I think that's a good plan. Look at that huge broker candle. That's what happens when you've got no liquidity in the market at changeover. Look at that. So that was the spread at the open, and then they widened the spread all the way down there. There was literally no trading, and then we came back up. So that is spread. So if you'd have looked at that chart at the open, your broker spread would have been 32 pips, a third of an ADR spread. This is why you don't have stop losses overnight. And they charge you a swap for the privilege of taking your money. Lovely. Good business brokerage. So yeah, Euro Swiss, spot on point to be putting on aggressive positions, I think. I think there's a good chance of a push today. So you want to be aiming really that area, or as I say, I mean, there is a possibility we might get a push. all the way up into here, but you know, I'd be out sooner than later, ideally. But saying that, I mean, I'm underwater on Euro odd, but I mean, all it's doing is accumulating. It's just not going anywhere. That's the reason I'm underwater on it. If I can get down to here today, I'm out. I'm done. I've had enough of it. Just getting out with break even on it. Euro's just dead at the minute. And so is the Australian dollar and the New Zealand, which is why I'm stuck sideways. So CAD Swiss is the other 4 hour. Some good selling starting to show on the DAX. Not quite going to get there, are we? Hopefully we get up there. So yeah, CAD Swiss, very nicely extended. This one I would be interested in longs on as well. I'm in the US dollar Swiss. Either of these, you can pick either of these. The CAD Swiss and the US dollar Swiss, they're very, very similar. We've had a pullback to the 24, and the CAD Swiss has been a lot more structured in its movement, because obviously the CAD and oil, as oil inventories and prices fluctuate, the CAD fluctuates more. With the US dollar, it's just been literally a straight up. So CAD Swiss, you've got a lot more support resistance areas, but long-term CAD, yeah, we should be bullish on the CAD all the time that oil prices are going up or stabilized at high levels. We'll be seeing decent CAD movement. So this is a really good spot to be buying from. We're really nicely extended on the 4 hour. We're just about to get a reversal alert on the hourly. The only problem you've got is we've broken, because of this Swiss franc move, it's pushed it down below this balance here where we sat there for a couple of weeks, quite happily trading away. So you've got to break through this, which is going to be a bit of an uphill struggle. So it's probably going to be a slow one. And the concern is obviously, why did the Swissy power up so hard? And is it going to continue to do it? No idea. I still haven't got to the bottom of why the Swiss franc has powered up, but it is stock market related. So tricky. So, but looks really good. Where you've had the 15-minute reversal alert already, so this is exactly where you want to be getting in. I've done it on the US dollar CAD, US dollar Swiss, but CAD Swiss is, to be honest, is probably the better pair to pick. But I've gone US, so either or. Bit of buying coming in again on the DAX. Okay, we're approaching those that level I'm interested in. So yeah, so CAD Swiss is a pretty good. Either mean reversion, you know, if the Swiss is going to continue to power up, we're going to mean revert and drop. If it's going to continue on its merry way, this is where we're going to bounce from. So really good strong buying coming in, as you can see, across all markets at the minute. Stevie, I'm already long on the CAD Swiss and the US Swiss, both in profit, so we'll offset them against Euro Swiss. Good. Well, not good. Not good. You've broken the cardinal rule there. You are massively, massively overexposed on the Swiss franc. Yeah. If you're long CAD Swiss, US Swiss and Euro Swiss, if the Swiss franc has another day like that, you are in massive trouble. Massive trouble. You'll be in 10-15% drawdown by the end of the day. So be very careful. Get some stops on those positions. Because if the Swiss franc does dump, i.e. if everything dumps against the Swissy, like we've seen for the last 2 days, because the Swiss franc powers up again, bear in mind the markets are pushing at the minute. Yeah. So there's correlation. Look at what happened. Probably better to pick in a US market. This massive dump all happened at the same time. So this was money coming out of the stock market into the Swiss franc. We are expecting the stock market to continue in that vein. if they're going to continue to pump money out of stocks into the Swissy, you're in poo-poo. At the moment, the markets are rallying this morning. We're seeing a lot of buying coming in, but they're rallying on a pullback. So we're expecting a drop. So just be careful. Obviously, this has been coming down absolutely fine while this has been going up. It's just so happened that this all happened at the same time. This massive drop we had, it was all correlated with the Swissy. So just be careful. I've been overexposed more times than I can count. And every time I've overexposed myself, that is where the biggest problems I've ever had have all come from. This is why I have the 2 currency rule. If I have 2 Swiss franc trades on, I cannot take another Swiss franc. And at the moment, I've only got one. I've got a 1 trade rule. I'm only taking 1 position in a currency. Yeah, I'm not. I'm exposing myself once. Saying that I have got 2 USs on at the moment, but this is a tiny. You know, this double exposure I've got on the US dollar is literally $10. It's now $25, but that's it. That's my exposure, $25. So it's 0.25% exposure. So just be careful. That's what this is for. To tell you, you've got 3 Swiss franc longs there. Danger. I should have a little alert, shouldn't I, when you do that? It's a good idea. When you press the button, it goes, "Oi, you sure?" I might even do that as a. That can be the WAV. When you go overexposed, it goes, "Oi, you sure?" I have to record myself. But at the moment, yeah, let it run, leave it running. See what I mean about this confluence here? Yeah, we got, everything's pushing up against the Swiss franc at the moment. Funny that market's going up at the same time. These guys are linked at the minute. It's all flowing in and out of the Swiss franc from the stock exchange. Right, well, we've certainly crashed that level, haven't we? Okay, so looking to see if we get some sell action now. I know, but I'm at break even on both these other trades. Yeah, well, that's all right. You're at break even at the moment. Obviously, just bear in mind how quickly you can go from break even to negative. Peter, likewise, I've been wrecked by having 2 correlated pairs at least 3 times. Yeah. That is it. If you're not position trading, it doesn't matter. If you're using stops, and this is why I say I'm normally I'm exposed twice on an instrument, no problem. At the moment, with what's going on in Ukraine and the current market situation, I'm exposing myself once. The only reason I've got this is because I got a stop loss on the US dollar Swiss. So this is not a position trade. This is a stop loss trade. That's the only reason. If you're using stop losses, expose yourself on whatever you like. You can go long on the Swiss franc 5 times if you want to. Just be aware that you probably, if it goes wrong, get stopped out 5 times. So would you rather be stopped out 5 times or would you rather be stopped out twice? The same rule applies if you're using stops. If you go long on the same currency pair or the same currency, individual currency, twice, you've only got a chance of being wrong twice. If you go long 5 times, you've got a chance of being wrong 5 times. It's overexposure. So you just got to, just keep an eye on it. It's very tempting. You get this signal coming up all the time on here, don't you? We see the RSI dashboard lit up like a Christmas tree. But 9 times out of 10, yeah. Look at this now. Well, we've got 5 alerts. Every single alert is Swiss franc. You can't take them all. You can, but just be ready to run. Stops at break even on 2. If I'm stopped out, then it's just euro sweep. Exactly, yeah, perfect, Steve. That's exactly. Just be careful. So we are stalling. So we got fairly decent rejection, long wick there. So I'm going to see if I can get a starter position on short. Obviously, if it keeps pushing up, it's not going to affect me. But if it does come down, then I'll be in. Obviously, target is going to be gap fill eventually. Be conservative. But overall, looking for pullback drop. So this is where we would be looking. If you stick a fib on, this is the 71.9, which is kind of where we get to. If fib is going to work, fib works up to there. Otherwise, that's irrelevant. That's not fib anymore. Up here is just stuff. So it either turns at these levels or it doesn't. Which is why I kind of use fib as a afterthought rather than a rule, because if you try and trade off the fibs, you'll get yourself into a mess going, oh, it didn't turn at the 31, it turned at the 50. If only I'd have turned at the 61.8 instead of the 50, and you rely on the levels. Just use it as a gauge, as a confluence. This level falls in line with it being a deep pullback on a drop instead of a shallow pullback. That's all it's used for. That's all I use it for anyway. Right, so the market's gone totally quiet. So that's the initial dump of orders this morning, it looks like. A few more coming in on the Nasdaq. So market structure is easily visible on the hourly. That's what I'm expecting. But obviously the other option in play is that, which would be a market structure reversal. Still got buyers entering. So when you're looking for, if you're trying to pick a top and a bottom, obviously picking tops and bottoms is the most difficult thing in the world to do, because we can't time when the market is going to turn. But the clues are that I look for in a reversal are inside bars, basically. So when we push up and we see the market stalling, you think of it like a plane flying up, and then planes just don't go like that. They go like that and they come down. So that's what I'm looking for, this stall. And a stall on a chart is an inside bar. So where you get a push up, push up, push up, push up, and then you get this exhaustion. The higher that candle and the lower that candle is what I call the control candle. And basically, if this continues to make inside bars, we are stalling. Yeah, and that's where we start then to roll over at the highs. So that's what I'm looking for. If this high then gets broken, I get a new area to look for inside bars. When we break back down below there, that's when there is a good possibility of your obviously reversal starting. So this is what the market reversal alert indicator is. Yeah, it's just telling you that hang on, we've just broken down. It's not doing the inside bar thing. It's just doing it slightly differently, M's rather than ranges. But it's the same principle. We fly up and we start to stall and drop. So watching that high there at this area. Well, lost my DAX trade this morning. Now I'll be trying to scrape it back for the rest of the day. Yeah, that's why I got out. If I was in two minds as whether to hold this morning, which you obviously did, because it's so easy for them to do this. And I was thinking about this morning when I was watching this trade play out. I was thinking I need to go back in time and sit for a few hours going through the DAX and see how many times, because I've noticed it 3 times this week now, including this one. How many times when we open do we reach for the gap but not make it? Because if you look back at these previous gap fills, yeah, so this one here and this one here. So it's there. What we did was we opened, we reached for it, and then decided to go away. We opened, we reached for it, decided to go the other way. What have we done this morning? We opened, we reached for it, we've decided to go the other way. So this opening, and last week we had one where it opened and it just went like that. And it gap filled. And I was like, how quick and easy was that? I think it happened before the Frankfurt opened, didn't it? But more often than not, it will do the reach, rejection, and then fill, than immediate fill. So I think potentially, and this is what we need to look at and research, those gap fills, getting out of them just before the open is probably the best and most sensible thing to do. And take whatever that is. So whatever it gives you, it gives you. So if it gives you 0.5% or it gives you negative 0.2%, whatever you've got, get out there. And there's a good probability it might do that. But there's, I think, probably a higher probability we'll push away if we don't make the gap fill before the open. So between Exchange Open and Frankfurt Open, if it hasn't done it, likelihood is we may get that move. So I'm going to do a little, it's on my list of to-dos. So if anybody wants to do that research for me and let me know, that'd be great. But otherwise it's on my list of to-dos, is to just get the facts and figures on that and see if there's an edge there. But yeah, I was very much toying with the same idea as you of just letting that. I was looking for that, and that does happen as well. But I think more often than not, if we've had that attempt at fill and we haven't managed it, there's just too much volume coming off the previous day. Don't forget what we've had is strong day, gap up, which shows that there's buying. Yeah, strong day, gap up, which shows that there's buying. So they try and get it done, but there's too many people buying the previous day to actually make it. And then when these guys have all bought, stocks are too expensive, so everybody starts to sell off. That's when you get your gap fills. So that's what's happening behind the scenes in the market, obviously, isn't it? But it's you don't know when it's going to happen. So that's the safe option. Hard to do it though when it's got that close. You know, it makes it's so easy for them just to pop down with one candle, isn't it? But you know, it's just we're not in control, are we? So we're just testing the highs. Okay, so broken out the highs. More buyers coming in. But that wasn't very convincing. We have broken them, but not a lot. Funnily enough, I waited for it to pull up first and start to move down. I got in on the second candle after the open as it was going down. Uncanny ability to pick the bottom when going short. That exact statement is the thing that I think I talk about that in the boot camp. How many times that gets said, that statement, and I've said it a million times as well. It's something that all traders say. Why is it whenever I hit the sell button it goes up? Why is it whenever I hit the buy button it goes down? It's just the market moving, and there's nothing you can do about it. When you see a structure form that looks bearish, you've missed it, haven't you? Because it's already done it. It's already started its bear move, so it's ready for a pullback. So, you know, if you saw that this morning, you'd be like, oh look, it's coming down, I'm going to sell it. All the sellers are now getting out of their positions. It's just the way it moves. Which is why position trading works, because you now, when you've got that position in short there, and you go, ah, right, the market didn't dump, that's fine, it's pulled back. Now I know that we're going to get that kind of movement because we're bullish. So that gives me the opportunity to get in and get out on the pullback of the bullish move, the mean reversion of it. Because getting it right first time is very, very hard. Okay, bearish move starting to filter in a little bit. So we're basically 40 minutes straight up. So if you took the opening range break to the high, well done. So we're getting to a point here where if you wanted to position trade this short, you can scale in. Obviously, if we break these highs, that's an invalidation of market structure. So market showing signs of being bullish, but anywhere up here now is going to be good for shorts. Got a nice propulsion move there to aim for on the hourly to start entering as well, but we're still in here. So this would be my next area to look at. Andy, morning all. I've struggled to get on the live streams this week as having work done on the house. Still holding short gold, looking for liquidity run lower. I haven't looked at gold this morning. Yeah, that level there on gold. We're waiting for US dollar basically. US dollar's not doing anything at the minute, so we're waiting for US dollar to power up. But like I said, we're now entering into this double balance area really, where you know this is the chop. We're entering the chop, so I would expect us to chop here. Ultimately, I think we'll probably come down and retest these lows, if not these lows, which we've already retested really. But I think we're just going to chop around down here. So yeah, short down into there somewhere, but it's difficult to tell whether this is going to go long or short gold. It's not really doing anything on its own at the moment. It's being pushed around by the US dollar, so we were just waiting for the US dollar to kick in, but that's a good short there. Just about to get a reversal alert on that double top, so it looks good. There's a lovely propulsion gap as well. Look at that. If you look at this on a higher time frame as well, this is a propulsion gap on the hourly. So yeah, it looks good down to there. Looks good for an ADR drop, whether it does it today or not, but good down to there, I should think. Still making higher highs, higher lows. As soon as we put in a new lower low and lower high, sign of potential reversal. So looking for US dollar yen buy. Anything wrong? US dollar yen? No, US dollar yen I think is probably good. Got a double bottom bounce. We've basically just come back down into this this area down here. So obviously the US dollar at the moment is very, very, very accumulative. I'm stuck in the US dollar CAD at the minute, and you know it's a little bit weak. Not weak, it's just neutral at the minute. It's not going up, it's not going down, it's not doing anything. So I think basically continuing yen weakness should see us be able to get a decent push on it, but you got to be patient with all of these at the minute. They're taking forever. It's just very, very erratic price action. So looks good for a long to me. Nice reversal off the double bottom. Just pulling back at the moment. Somewhere up there, but you know it's just taking forever. Everything's just taking forever to move at the moment. This is why we've had such flat RSIs this week. It's just been flat apart from the Swiss franc. When you get something that is being manipulated to such an extent, the Swissie's been manipulated at, the rest of the currencies go flat. All the money and all the activity is going on the Swiss franc because the market sees the Swiss franc moving, therefore the market gets involved with the Swiss franc because you make money off of what moves. If the Swissie's moving, the rest of the market gets involved. They forget everything else because it's not moving. You know you need the market to move, and that's especially true in the summer months when we get the light liquidity. You jump on what moves when it moves because everything else is just hideously slow. So, but yeah, US dollar yen, it's not in a good spot. It was down there, obviously at the bounce. So, but at the moment we're in a downtrend based on the yen strength we've had, and obviously the neutrality and weakness of the US dollar. So, but it's in a perfect spot to elevate itself. And the fact that the Bank of Japan have obviously called 135, I ought to put that in that level. That's what the Bank of Japan have called, as I'm not worried about it. So if they're not worried about it, the US might as well take advantage and do it. So yeah, it's got plenty of upside. Got 670, about 5 ADR upside on it. So loads of room. Okay, so new inside bar formed. That's the first bearish candle we've had since the open. But no sellers. So looking for a break of this candle to get into an initial position. Watch this propulsion move where we had a double top and then we slammed that. So if we're going to continue upwards today, Not that there's a lot of room to continue upwards, but if we are going to continue upwards, we've got to 124. Sorry, 142.37-ish. Uh, 142414. Oh, I just called it 142.40. Somewhere up there. There's our upside. Basically, ADR. Upside is ADR. Don't do that line. Here come some sellers. In one. Oh, just missed my break-even exit on Euro Oddlet. Meh, should have had an alert on that. Well, they took out yesterday's high, so let's hope they go for yesterday's low. I just want out of it. It's just not done anything all week, so just want to get out. Still like it short, but it's just taking too long, and I don't want to hold it over the weekend. So if we can get a nice push down to ADR today, that'd suit me fine. But I'll keep a close eye on that one now. Missed that. Second short on the DAX. What's the pound odd doing? Getting ready for a move on the pound odd. What have we done today? 0.5%. Oops. Oh, so I'm putting buy limits on. I wanted to sell limit. I'm just placing some positions on the funded account. Pretty much the same. I've got a. I've just taken a sell here, and I've got a sell limit. Sell stop under there. So flat this week. This week, I've never seen the RSI dash so quiet this week. literally, it's just been talking about the Swissy and nothing else. It's just so quiet. New Zealand dollar CAD was the other thing I was looking at for potential long opportunities this week. I didn't bother taking any, but would have been good to trade long on M5 this week. Extended on the daily. Nice big extension on the daily. Biggest extension we've had going back to 2019. So really good long opportunities, but didn't take any this week. I'm just kind of using this to try and get into some long positions, scalping positions on the funded account. So that's why I'm paying attention to this. But there's not been a lot on it. So I haven't needed them this week because I've absolutely cleaned up. Done $9,377 in the last 2 weeks on the funded account. Obviously 75% of that is mine. And then I've got to multiply that by whatever the pound exchange rate is with the US dollar at the moment. 0.75. So I get 0.75%. What's that? 9,377 times 75% times 75%. So I get 5,200. Not bad. That's a pretty good equation. So basically, if you're in the UK and you're trading a US dollar funded account at 75% profit split, you're getting roughly half of whatever you bank, aren't you? So I've done just shy of 9.5 grand, and I'm going to get just over 5 in my currency. Just pulling back on the DAX. It looks quite strong today. Wishing I hadn't got that second position on. Very I alluded to this yesterday. You get tick, quiet, tick, quiet. There you go, tick. This is just algorithms buying. Yeah, algorithms just gradually buying up stock. See it, tick up, tick down, tick up, tick down, tick up, tick down. If you had Boocamp, you'd be seeing it bouncing off, just building a position. Wendell, I'm sold on pound US dollar and pound yen. Yeah. Might have to wait on the pound US dollar. But yeah, that's good short. Nice rejection today so far. Liquidity got run yesterday. Just waiting for the US dollar. As I say, we've got no US dollar news. I'm waiting for the US dollar as well on the US dollar CAD. We're just waiting for the US dollar basically. Hopefully it's like waiting for a bus to come along at once, i.e. double the strength. And the pound yen. Pound yen, not so sure on for a short. Yen, I think, is going to weaken, but you're trading a very weak currency against a very weak currency, so you get accumulation. Not the best pair to trade short, but it can go, obviously. So prop firm sort of thing, Lincoln. What's that mean? Oh, I was talking about prop. Yeah, so basically I've got a funded account with my Forex funds. Get paid 75% of what I make, but in US dollars. So I have to take 75% of that. So I was just typing away to somebody in the Telegram group. I don't know if you're in here. I can't actually say your name. Amor Caden just asked what the win rate is of the EA. Talking about the market reversal alerts EA. There is no such thing as a strike rate on an EA that has an input. So if you have an EA, sorry, I'm just testing, just another testing EA. I have millions of testing EAs. If you have an input on an EA, yeah, no one can give you a strike rate on it, because if I change this, not that one, that's a really bad example. If I change that to 200, it's going to have a different win rate. Yeah, so an EA doesn't have a win rate. A strategy has a win rate, but that win rate is based on historic data. So what happened between that date and that date, the win rate there has got nothing to do with the win rate on this date to this date. Yeah, because the market is not going to replicate what happened there. There is no answer to that question, and I get asked that question at least 5 times a week, I would say. Yeah, so look at this here. Test an EA over that time period on the 1 minute chart. Has it going to have anything to do with what happened there? Yeah. Market did that. Then the market did that. The win rate there is going to be different to the win rate there. No matter how much historical testing you do, and no matter how many time frames you pick, if war breaks out in Ukraine and the market collapses like that, that EA will not give you the win rate it gave you on those tests. Yeah. Back testing is good for strategy development. Testing an idea, seeing what happens, seeing how best to milk money. But it will only work if the market conditions are similar to what is happening now. If we are trending and you test it in that period, it will get a different result to that. Unless you have an EA that can adapt from trend to range, it won't do the same thing. So there's never a strike rate, a win rate on an EA. Unless the EA doesn't have an input. If the EA has no inputs that change how the EA behaves, then yeah, whatever strike rate you've had is going to be forced. But that is conditional on obviously the market doing the same thing, which is never going to happen, which is why I keep saying over and over again, you will not find an EA, mine included, that you can put on a chart and run automated and it will just make money. You've got to intervene, and the signal I have for the EA which is based on one strategy out of probably 10 or 20,000 possible strategies it could trade, it's done a 70% strike rate. But I had to intervene on 9% of the trades because the EA was going wrong. Because the EA doesn't know how the market's moving. It doesn't know there was a war in Ukraine. I had to intervene. Still produced 70% in 30 weeks, but I had to intervene because it doesn't know the war in Ukraine broke out, so I had to sort it out. So if you're in here, there's a detailed answer to your question. But I asked the same question, so I am as patient as I can be with these questions, because I have asked those questions many times in the past when I thought there was such a thing as a strike rate on an EA, but there isn't until you've tested a million of them. And this is what I do. I build EAs all the time. I'm building an EA based on what's called a 4-bar fractal at the minute, which is pretty much what I'm showing you on the screen here. This is a 4-bar fractal. This is a 4-bar fractal break. That candle is a 4-bar fractal break. You can look it up if you want to know what a 4-bar fractal is. Very similar to a 3-bar fractal. It's similar to fractals basically, but it uses four candles or 4 bars. And yeah, it's got a really good strike rate. But I can't get it profitable. I can't get it. And this is the problem everybody finds with EAs. You get EAs which are fantastic strategies. But they do things like that. And you go, at the end of the day, after 1,500 trades, you only made 4.5%. That is a gold dust strategy. But what you need to do is trade it manually so that you can see what happens. Yeah, this 4-bar fractal at the moment, I can't tell the EA to trade this short, and then if it sees a bull candle followed by 2 bear candles and it sees tick strike going positive, to get out the trade. I can do that. It can't. And this is why I keep saying about in the bootcamp. There isn't a bad thing. There's no such thing as a bad strategy. There's bad execution of a strategy. Anyway, I'm pretty sure I've said that before many times. Lincoln, cool, yeah. My target is at 123.05. There are big buy orders. Wendell, what are you talking about? The 123, you must be talking about pound US. 123.05. Yeah. Yeah, it could get there. I mean, the thing is, if this is going down, this is going down. So you know, depending on how many positions you've got on, this is a great area to be selling from. If we're going to continue market structure down, yeah, I mean, it's going to go way lower than that. Easily test these lows. But as I say, we're waiting for this thing to come to life, and at the moment it's just not. So fan your channel by your indicator. I don't have it anymore. Well, if you've bought the indicator, you've always got it because you just download it from the marketplace. You don't. It's lifetime license. If you bought it, you bought it. It's yours. If he breaks this minimum, he's sure to have a great chance of falling. Yeah, it's coming. I think you'll be safe with that short. We've got some buying starting to trickle in again. DAX is holding up at the moment though. We're entering the doldrums now. You have heroic levels of patience. I've been told that before as well. Many times. Sometimes I have unkind thoughts when hearing some of the questions in the group. You should see some of the unkind conversations I have with people in the Telegram group, in private. I don't mind people disagreeing with me, but when it's somebody that's been trading for a year disagreeing with me after I've seen something play out for a decade, it's just... I just get to the point where I can't say the same thing again. But I have to bite my lip. I don't forget, and as you know, you've been trading a while. I remember every time I get a question that I think, not again, my head's about to explode. I think back to when I was first started trading stocks. And then I think back to when I first flipped over to start trading Forex. And then I flipped over to when I got a mentor, my first mentor, and what the pain I must have put him through. He was a 20-year veteran trader, and the questions I asked, now I look back on it and I'm like, whoa, that's on baby pips. I must have been driving him nuts. So I have that sort of mentality in my head to think, I know I should be kind, but sometimes people ask you a question, you give them an answer, which is either factually an answer, i.e. there is no grey area, black and white, it's a fact, or it's an opinion, which is most people's opinion, and then they argue with you, and you're like, just can't be bothered. Seriously, I've got better things to do with my life than sit arguing in Telegram about whether a reversal indicator repaints. I don't know how many times I've explained it. It draws market structure. Market structure changes. Yes, of course it repaints. If it didn't repaint, it wouldn't be drawing market structure. But the problem is everybody's looking for that indicator that draws something on the chart and leaves it on the chart, which means that your chart is full of crap. You know, it's just certain questions you just get over and over again, but that's life. Hey, I'm not a teacher. I'm not an educator. I wasn't trained to deliver training courses. I stumbled into this. So I have no formal training in how to deliver training. There you go. That's the problem, I think. I couldn't find the DE40 on my active traders broker. DE40 is the DAX, so it may be DAXI, it may be GE30, it may be DE30, it may be so it'll be Germany 30 or Germany 40. It'll be DE or 30 or 40 because they changed it from 30 stocks to 40 stocks at the beginning of this year. A lot of brokers haven't updated that. It might be called DAX or DAXI. A lot of them call it the DAX. It's the German DAX though. Some brokers don't have it. So for example, I haven't got the FTSE on Robo Forex. I have got the FTSE on my other broker, which is called UK 100. You know, everybody's got different. Just have to ask your broker if you can't find it. Morning, Neo. Yes, you are late. Black stamp in your book. Just shorted the DAX at that high. Yes, so have I. We're entering the doldrums though. We get a lot of this now where we have the initial push. So in reverse yesterday, there's your initial push on the DAX yesterday. That's what happened after the initial push. This is our initial push today. Quite possibly this is what's going to happen next. And then we reversed it. And that's what I'm looking for. But we might have to sit through this. And I did this the other day. There. I sat through this. I shorted here, here, and here. And I sat through this for 3 hours and got out in New York. You just have to wait. Nothing you can do. Patience. This is where patience comes in. Has purchased orders from major banks at this level. Don't know where you're getting that information from, Wendell, but there is no centralized exchange in Forex. You can't see, you cannot see bank orders in Forex. You can see accumulations, which are likely areas banks have orders sitting at, but there's no way of seeing that information. There is no centralized exchange. The banks talk to each other, they don't talk to us, which is different in stocks. In stocks, I can see every order that's placed on the Chicago Mercantile Exchange. Not for that, because that doesn't run through the CME, but for example, on the NASDAQ, I can see every order in the market on the NASDAQ in the ladder, but I can't see whether they're real orders or not, whether they're spoofed orders or whether they're real orders, or whether they're bank orders or whether they're retail orders. All I can see is volume. But you can't see FX. And if somebody's telling you that there's $557 million sitting by a bank at a certain level, I'd be worried. Unless it's an options expiry. If it's an options expiry, yes. But that's not Forex transaction. That is a futures. That's an options transaction. It's a different thing. You need an FAQ. Oh, God, I've tried to write FAQs. Yeah, I know I do. I just don't have time. I'm trading. And when I do have time, I just don't want to spend it writing FAQs. I don't get the questions I get asked most of the time. 90% of people are intelligent enough to seek out their own answers. The thing that grates on me, and one of my mentors, Strat, he ground this into me, basically was you will not be spoon-fed anything. And that is, I had to read through 10,000 pages in a forum before he would even take me on. And I read those 10,000 pages, and at the end of it I didn't have any questions, because every question I had was answered in those 10,000 pages. Basically, if it's been asked before and it's been answered before, go and find the answer. If you can't find the answer, ask the question. If you can't be bothered to do that, don't become a trader. Simple as that. Because it's bloody hard work, and you're going to need to put in years. And if you're looking for a spoon-fed answer that's going to give you that strategy, that's going to give you that arrow, that's going to give you that profit 80% of the time, not going to happen. Sorry to burst your bubble. Still sitting in accumulation. I think we might be stuck. So we're just accumulating at the minute. We've got quite a bit of buying just started to land as well. So we could be basically flagging here for a new leg. In which case we're pushing up into this area as next resistance. So I'll get stopped out on these and have another go up here. We haven't got above the highs yet, and I've still got a fair bit of distance on the trades. So stops are these two on these two positions. But it's just a flurry of orders, doesn't mean we're going to push up, just means they're retesting to see if the sellers are still there. Can you cover US dollar Swiss? When it broke the ADR levels below, and I took a trade on reversal indicator for up, but got stopped out. How should we know that which reversal to take? You don't. You don't know. What you've just answered your own question. So that's a good example, Vink, of question I get asked a lot. Yeah. Yesterday we hit 125 ADR, M5 reversal. Yeah. So there was a reversal alert at 125 ADR. So stopped out in one of my positions on the funded. So 102. So that would be 125. Very easy. So down here is 125 ADR, somewhere around there. Yesterday we got a reversal alert there, and you took a long and you got stopped out. Yeah. What are the odds of your trade based on 125 ADR? How many of your trades are going to fail? If you took 100 trades, 23. Yeah, that was one of the 23 that failed. There's your answer. There's no, I think everybody, and this is the trouble with this industry, everybody's looking for the holy grail. Everybody's looking for that answer that stops that happening. You are going to lose more than half of your trades. Very few traders have a strike rate above 50%. Very, very few. If you're going to use a stop loss, you're going to get stopped out on the vast majority of your positions. Yeah. So this thing tanked, hit 125 ADR, gave you a reversal alert, and then continued to tank. Just because it hits this line, do you think a multi-trillion-dollar a day market is going to give a monkeys about a $50 indicator that draws a line on a chart? It's got nothing to do with it at all. What it does tell you is that 23% of the time we extend above that level. So therefore, the odds of it reversing are higher, or accumulating or reversing are higher than the odds of it continuing. Doesn't mean it can't continue. I've seen 300% ADR many, many, many times. Yeah. If the Bank of England says we're going to increase interest rates to 1% and then on the day they put it up to 2%, do you think it's going to respect ADR? No. And that'll be one of the days where it exceeds this 2% statistic. 2% of the time, i.e. 6 days a year, roughly, that thing will go way beyond that, way beyond it. You don't know. You cannot time the market. No one can time the market. We never know when it's going to turn. We can look in history at what's happened in the past and extrapolate what may happen in the future, but nobody knows what's happening in the future. Which is where indicators come in. You build a case. You think of yourself as a lawyer. You have things that happen. When you get RSI extended, you tend to get moves out of that zone. We're going massively up on the DAX at the moment. I know we are. So I'm getting stopped out in those positions. But it's a good lesson. RSI, when it gets extended, a lot of the time will push. Some of the time it won't. You get a reversal alert in conjunction with an RSI extension after a big down day, which we know tends to be followed a lot of the time by an up day, and you've hit an ADR level. You've got 1, 2, 3, 4 things. You've got 4 things for your case to go long. Good chance. Better than if you had 3 or 2 or 1, but doesn't mean it's going to work. The important thing is, when you take that reversal alert and you put that stop in, you make sure that you take more out of the market than you're going to lose. If you can be right 50% of the time with a 1.1 to 1 risk-reward ratio, you are a profitable trader. Yeah? You're probably not actually, because commission and swap is going to eat that 1%, that 0.1 edge. But so yeah, so there's nothing wrong with that trade. You took a good trade at a good level. It just didn't work. Tough. Unfortunately. The reversal alert indicator, the best trades you will get are going to be in conjunction with support and resistance. Yeah, accumulations, propulsion breakouts, and support and resistance levels, supply and demand, whatever you want to use, an area that is likely price is going to turn at. So for example here, yeah, price pushed up into there, pulled back, pushed up into there, pushed down again, rejected, pushed up, did a liquidity run of that level, then gave you a reversal alert. That's a good one to take. It's a double top, stop run, short. Yeah, is this a good one to take here? Yeah, I'm on it. It's an accumulation which has been retested to try and break those lows twice and failed. We're down there now. We're just about to get a reversal alert out of that exact same area. Good trade opportunity. RSI, nicely extended. Looks good. Got propulsion gap targets to the upside to aim for. Spot on. Is it going to work? I haven't got a clue. Depends if the Swiss franc powers up or the US dollar tanks today. I have no control over that. The market does. President Putin has control over it. Barclays trading desk has control over it. Chase Manhattan Bank does. I don't. I haven't got a clue. What I'm doing is getting on with a risk. And I'm going to hope I'm right. And the banks agree with me. If the banks agree with me, I win. If the banks disagree with me, I lose. Those are the only things you know. It's going to go through time, and it's going to go up, and it's going to go down. Those are the three constants in the market. Those are the only things we know, and it doesn't matter how many indicators you put on your chart. Those three things are the only things that matter. And the only things that will ever change are indicators that you place on your chart that give you a different insight into when to press these buttons, if you've got them. If not, when to press these buttons. That is it. Yeah, I hit sell up here because I thought we'd had enough and I'm looking short. I'm wrong. I'm not going to stop shorting this. I'm going to short it again. But I'm going to short it again at a higher level because I was wrong at this level. The banks disagreed with me and took the price higher. I'm going to wait and have another go. And hopefully the banks will agree with me next time. But I lost 1% on those trades there. And I will make sure I make more than 1% when I get into the trade that the banks agree with. Sometimes I get into trades, like over the last 2 days, where literally every trade I've got into, the banks agreed with me, and I've gone, thank you very much, and they've given me a load of money. Sometimes they disagree with me, and they don't give me any money. I can't control it. I have no control. There's a video in my YouTube channel called You Have No Control. Watch it. As soon as you realise that fact, that you have no control, you suddenly relax and go, doesn't matter, I hit the button. It's either going to work or it's not. I have no control. No one does. No matter how many people, and this is the other thing that gets my goat in the Telegram channels, not mine, because I knock it on the head immediately when people start talking about it, but in a lot of the other Telegram channels and Discord channels and all that sort of stuff, it's like, sell gold now, it's moving down to XYZ. No, it's not. Who told you that? Have you got an insider in Barclays that's got $200 trillion worth of gold transactions to do short? If you have, excellent. If not, shut up. You have no idea where gold's going. It's got nothing to do with you. If Putin decides to open his mouth this afternoon and say, I'm going to nuke Ukraine this afternoon, gold ain't going down there. I guarantee it. You know, but this is the thing. People want to be right. And again, I cover this in the Boocamp. The mentality of everybody in the Forex market is they want to be right. They want to pick that high. They want to get that trade, that one-shot trade that gives them a 3-to-1 risk reward and post that chart and go, look how amazing I am. That is 1 out of 20 trades. Really, it is. It doesn't work like that in real life, does it? It just doesn't do it. And you know, the people that come in and say gold is going here, gold is going there, this is going there, and gold, for some reason, people, it's always about gold. I don't know if it's a certain type of person that trades it, but it always seems to be gold. Everybody's forecasting the gold price, and a lot of the times on the indices as well. A lot of the funded trader groups that I'm in, that you only, the ones you get access to when you are funded. Some of the funded firms have a special channel just for funded traders, funded their customers, basically, I guess. I see a lot of that in there. Today, the Nasdaq is going to do this, and then when it gets to there, it's going to do that. We should be entering there because this is happening there, and that's doing that. And there's all this detailed analysis, and it goes, whew. You never hear from that person again because they just blew their account. You know, it's full of it, isn't it? This industry, and this is why I think, and why I got tied up in such a mess in it when I first started trading in it, is because it's total information overload. And when you strip it down to the bare moving parts, which is the banks executing trades that will happen because the banks have to execute them, not because they necessarily want to execute $100,000 long right now, but Microsoft just asked them to do it, so they got to do it. As soon as you realise the fact that a lot of the banks have actually got no control over where the market's going either, you just end up pressing the button, and you have a 50% chance of being right. How far it's going to go in whatever direction is out of your control, but every time you hit that button, you have a 50-50 shot. Those are your odds. Yeah. But you can look at things and go, well, there's probably more chance it's going to go now because everybody was buying it, and now they're starting to sell it. So I think probably the odds are in my favour. That's the best shot you've got. That's the best indicator you have, is your eyeballs. If this thing does this after you've hit that button and it's made more than the last trade that you lost on, you've done it. Letting go of the greed, and this is what we were talking about this morning, letting go of the greed at that level, because I'm happy with 0.5%. Yes, I think we're coming down there, but do I want to be greedy and potentially lose 1%, or do I want to accept half? That bit is totally personal. Whether I do this or you don't do this or whatever is down to the individual. That's where psychology comes into it, and this is why everybody says 90% of trading is psychology, which I kind of agree with. But I'm not a psychologist, and I wouldn't really know. I've read lots of books on psychology. Trading in the Zone by Mark Douglas, sitting on my desk right now. Always is. I pick it up often and flick through bits and pieces of this book. Best book written on psychology. Do I understand it? No. But I understand what he's talking about, and at the end of the day, the line you take out of that book is you haven't got any control over what's going to happen, so stop trying to control it. Stop trying to find that indicator that tells you whether it's going up or down and when it's going to happen. It doesn't exist. Mine doesn't do it, as you've just pointed out, Fink. Didn't do it yesterday, did it? But it helps you build a case to get in, and that's what we all need as traders. We need a reason to enter the market. My reasons to enter the market are this and the reversal alerts indicator, coupled with supply and demand and support and resistance. And I enter the market in very, very small chunks so that I can wait, if I'm wrong, to get another bite of the cherry without losing a ton of cash. You know, that's it at the end of the day. So there you go, that's the boot camp in a nutshell. I think. But yeah, anyway. The real world. Think of it like the Matrix. When you take that pill, everything becomes clear. You may not like it. Yeah? Do you think Neo liked going from being in a suit, living in a city with friends and everything, to then actually, oh, you've got massive hole in the back of your neck, we're all poor, and there's a load of robots trying to kill us every day of the week? Didn't like it, just had to get on with it. Same as trading. Unfortunately, it's a tough one to do, and it's not easy. And there is no easy way of doing it. You just got to get in. And you know, this is what I say. I'm looking to get in with a short now. We are really extended on this DAX now, and we're approaching what I think is probably going to be last chance saloon if we are going to hold bearish market structure on the DAX. I don't think we're going to be able to get much higher than this. I might be wrong. We might be going into a bull market, and today might be the very first day of the bull market where we head back up to highs, all-time highs on the DAX. Yeah, I might have this completely wrong. I don't know. But I'm building a case. We've had a reverse alert. I'm not looking for anything less than that if we're going to continue with a bearish market structure. That's all I know. I'm expecting that to happen. If I'm wrong, I'm going to get stopped out probably 3 or 4 times today and lose 2-3%. And then I will change my stance to bullish. But, you know, this is what I say, and this is what sparked the conversation, was the EA question. What's happened in the past doesn't necessarily mean it's going to happen in the future. In the past, for the last few months, we're bearish. Does that mean the next few months are going to be bearish? No. I have no idea. Got clues, but I haven't got an answer. Just got to get in. Anyway, lesson over for the day. Sorry to go on a ramble, but hopefully they're useful rambles. I don't want to paint a picture of doom and gloom, but equally, you know, this is not an easy job at all. So basically we've got a push, accumulation, push. Again, the market quite often will move in 3 waves. So we could be looking for accumulation and then a third leg. But we've got 2 hours solid straight up on the DAX now. All the US indices are doing the same thing at the moment. So looking at the US, we got a lot further to go on the Nasdaq than we have on the DAX. But again, you know, what happens typically when we get a reversal starting? Double bottom. So potentially, you know, we could well go for the moon today. Just had a reverse alert on the S&P off of a double bottom. Loads of room to pull back long. It's a good ramble. You're touching on an area that I'm struggling with. You will always struggle with it, unfortunately. I struggle with it. Everybody struggles with it. Best traders in the world struggle with it. This is why they burn out. And this is why I don't do this. Well, I am now. I'm forced to do this. This is why I don't trade. I don't scalp, because I think I said last month, this is why I've gone down to 1 live room a day instead of 2. I'm so exhausted. This is the most exhausting way to earn money, scalping short time frames, which is why I trade H4. Literally on H4 I make less money. I'm making more money, admittedly. I'm making a lot more money scalping, but I'm also back to working 4 to 8 hours a day. Trading H4, I can trade for an hour a day and make 10% a month, but in a completely different way. But you're never going to have an answer to the market, because the market is completely dynamic and changes based on economics. It changes based on technicals. It changes based on fundamentals. It changes based on world events. It changes based on a fly having a poo on a cow in the middle of a field. You know, it literally is completely random, and everybody is trying to find order in a random market. You can't. It doesn't exist. It's random. And the reason it's random is because you've got 10 banks executing trillions of orders in dollars every day with conflicting interests. There's 10 guys sitting at desks, or there's 10 algorithms sitting in banks fighting each other. That does not cause an orderly market. That causes chaos. And then as soon as Putin opens his mouth, or Trump opens his mouth, or an interest rate is changed, those algorithms, those banks, change their minds. And again, their minds are different to each other's. Therefore, randomness continues. You know, it's just flipping a coin at the end of the day. They're all around yesterday's high. Thought that might be a reaction point. Yeah, again, yesterday's high is good reaction point in all markets, quite often, and that is the liquidity run. Yeah, we know certain things happen. We know that when people go short, they put orders there, and we know the market hunts for orders. The thing is, when that gets to those orders, and this is the point, yeah, and this is where we build our case. The market is now here, okay? There is a 50-50 chance, and that 50-50 chance is based on the stock purchasing ledgers of the banks today and the institutions today. That is what is going to determine whether we go long or short. Randomness. Have those 10 banks got more buy orders on their books or sell orders on their books? When they hit yesterday's high and they find this liquidity that they can use to execute their orders, are their orders long or short? No idea. So as a trader, our job is to execute our bias, which if you're playing a liquidity stop run short, is to enter the sell order. Put your stop above that and hope that the banks today, hope that they have the same ledger as you are looking to jump on. That's it. If not, you are going to be wrong. And it doesn't matter how many times you go and backtest this, yeah, in the past, you will find it will be somewhere in that range, the result. Okay? You will not take every single one of them. You will take some of them, because you won't see some of them. You'll be asleep for some of them. Some of them you won't get filled on. Some of them you'll change your mind on. You'll press the button and then you'll go, actually, no, I don't fancy it. So this, what the computer told you when you did a backtest on this exact strategy that you built an EA for, will always give you that. Always. What's going to happen in the future is down to you as the individual. Your EA in the future will get something like that. It may make a profit, it may make a loss. Don't know, because I can't read the future. Make sense? Doesn't make sense because it's completely chaotic and random, but that is what happens. That is it. Yeah, this is either going to work or not. Yeah, if you take a short right now at yesterday's high, when this candle closes and you put a stop here, they are either going to be happy with that liquidity run and they've got the orders they need to execute their positions, or they're not. Couldn't tell you. There's only one way to find out. But look at the risk on that. Tiny. Look at the reward on it. I mean, this is a different instrument, but I mean, if this comes down, this is coming down as well. They're all, they're all interlinked. Because when people buy stocks, they don't buy stocks in one company, they buy stocks in a sector. So if I buy a load of S&P stocks in electronics, there will be German stocks in electronics I need to buy as well, because I'm buying from my portfolio. That's why they all move in sync. Institutions buy in bulk across multiple companies in multiple sectors, so you don't get divergence very often in indices. When you do get divergence in indices, you have a good signal there to take a trade. Which divergence is going to be the one to take? Don't know. If one's going up and one's going down, which one's right? What's your odds? At the end of the day, it's going to do that or that, isn't it? As soon as people accept it, that's just when it all starts to make sense, and you just don't care, and you just get in and you get out. And it's all about putting this over into that. And when this is wrong, use this to get rid of that. I think I've done the entire boot camp, the entire 5-day boot camp. I think I just did the whole lot in an hour, didn't I? Pretty good. You want to save this video? I haven't been on a ramble like that for a while. It's good fun. US dollar Swiss. Oh, Euro odd. Right, Euro odd. I've had enough of you. Euro odd's break even. Tell you what I'm going to do. What are we? 130. So I've got. I'm not worried about taking a little loss on it. If the banks have decided, yeah, right, now let's tank it. I'm going to make some money. If they decided we're going to double bottom and bounce back up into the range, I'm going to get stopped out, but I've had enough of it because it's just not going anywhere at the moment. So it's either going to go or it's not. If it's not, sod it. Target down at ADR. Let's get rid of these sell limits as well. Don't need those. So I'm going to put target on all positions at ADR. I'll either make something or I will get stopped out. There we go. US dollar Swiss. Oh, that's nice. Right, so we are at a critical point here. So again, you know, it's the same thing. We're at yesterday's low. They're either going to come and take this liquidity and then the algorithm's just going to range trade, yeah, and continue, or it's not. They're either going to do that and slam it, or they're going to bounce. I've no idea what they're going to do, but either way, I've had enough. I'm out, basically. Let me just move that down. So it's either break even or it's going to make me money. US dollar Swiss, as I say, this thing's just stuck as well. I'm going to give this to the end of the day. We've got no news today, so wherever we are today, I'm out of this. I'm either going to stop out on it if they come and take that, or it's going to go into profit, and I'm going to take whatever I've got at the end of the day. I'm not going to hold it over the weekend. And then I've got Euro odd short. US dollar CAD. I've just done that one. Sorry, no, US dollar Swiss I did, didn't I? US dollar CAD I've got long as well. And again, we've gone nowhere all week. We've just been stuck. So looks like I'm going to stop out on this one anyway. So really tough week on Forex this week. It's just been one of those weeks where we just had no movement. Unless you're on the Swiss franc, which I was on the pound Swiss short, obviously, and got out way too early on that. But really tough week again on Forex. And again, diversification is something that you can't learn in Forex. You know, when the market changes, you have to change with it. You know, everybody loves doing a particular strategy, but what happens when your strategy stops working? Position trading in the war has been very, very difficult and very hard to execute. So I've switched strategies back over to scalping. When do you do that? When it all starts going wrong. Your EAs and, you know, your strategies. If you have one strategy, you can't do that. You've got to switch. You've got to make money somehow. You need more than one string to your bow, which is something horrible to think about, because when you finally crack a strategy and go, wow, this is actually starting to work, the world goes into turmoil, COVID hits, and it all goes wrong. And then you're basically back to square one. Unless you come to that realization that you got to hit one of those and hope and relax about it. And that's where the position trading thing really helps people, I think. Helped me massively. When I realized I could hit that button, not worry about it. You know, that's a big weight off your mind. Gives you time. Sellers are starting to kick in. So I got sell stop underneath this low at the minute. So this candle high we pushed out of, pulled back in. We're on inside bars. This is a 4-bar fractal. Yeah, 1, 2, 3, 4. if this candle breaks that low, that is a 4-bar fractal reversal, which is what I've been testing as another pattern, which is a pattern I trade anyway, but I've just been doing some statistical gathering on it to make sure it's got a decent edge on M5, and it seems to have. So something I'm going to add in, and I'll probably add this into the price action toolkit as a signal. Which is why I was testing, basically, just making sure it works. And again, as something else as well, just before I disappear, in the strategy tester, I'm not quite sure which version I've got here. Yeah. So basically, whenever you do anything in the strategy tester, you get the report at the end. This is the bit you need to look at. Yeah. So with the 4-bar fractal on a 1-to-1 risk reward ratio, which is what I tend to test on, that's what I'm interested in. Yeah. So if we put this at 1-to-1, so I'm using a stop loss of 30, and that's basically 100% of my stop is the target. So 1-to-1 risk reward ratio, and I'm trading when the markets are open. If that gives you a decent strike rate, it's a good strategy. Yeah. So if you run this and it works more than it doesn't, yeah, that's what's important. Forget your risk reward ratios, because with every single EA or indicator ever invented, if you make the risk reward ratio higher, the strike rate will drop. If you put a risk reward from 1-to-1 to 2-to-1, it will not hit as many targets. You might make more money, but it won't hit as many targets. What I'm interested in is, are we hitting that magic 40 to 60 range? Yeah. Is this right at least half the time? Because if it's something that when I get in, it actually moves my way, I know that I can watch what's going on in the market and decide to get out when I see some bearish price action going in. Or when it's pushing down immediately against me, I can decide to get out. But overall, when this thing happens, when this situation happens, is it roughly going to give me an edge? Yes or no? That's all I'm interested in. Now, if I increase this to 150, so I'm going for a 1.5-to-1 risk reward, that 43% strike rate, I didn't see how long it ran over, but it's gone now. That strike rate will be lower. But it might go from not being profitable to being profitable. Yeah, now we're down to 32%. And we've made a loss. I don't know what we made, a loss or a win on the last one. I didn't really pay any attention to it because it's not important. That figure there is generated by your risk reward ratio. I'm not interested in risk reward ratios. I'm interested in getting into the market on momentum on low time frames so that I can get out with some money. That's what I'm interested in. And I was actually building this for the DAX, not for Forex, but so yeah, so that's what I look for basically. Is it right roughly as many times as it's wrong? And if it is, that's not going to work because the lot limit is different. That's probably going to need 300. Yeah, so if you get an equity curve that runs pretty much flat, you know you've got a strategy on your hands that works. Your job is to execute the strategy, because you don't have no idea how many of these 87 trades, 89 trades or whatever, I had no idea how many of these I would have taken, but I know roughly half the time it's right. So the ones that I take, I need to just watch what happens after I've pressed the button and deal with it. Maybe come out a break even on that one because I don't like it. Maybe the crickets lit up red when I was long and we had a massive bear candle going and I thought, oh, don't like the look of that. But the ones that I can get on that work are going to make me money. Look at this, it's made 14 grand. January 2019 to February 2019, so 28 grand in a month with a 44% strike rate. Would I get that? No, because I'm not going to take every one of them, am I? This would have over that period of time, but let's go back a year and see what it would have done year before. Not doing as well, is it? Because the market conditions are different. But what isn't different is that. Yeah, don't forget this is the 1.5 to 1 risk reward ratio, not the 1 to 1. This won't change. Yeah, it's that 50%. Yeah, your job when you hit the button is to decide what to do next. And you don't know what's going to happen next, do you? Because every time you hit the button, something different is going to happen. You might time it right just before a news event and it flies up 300%. It might accumulate for an hour. No idea. No idea what it's going to do. But you just need something that tells you to get in. And a 4-bar fractal is as good as anything. Take a short. What happened after that? Boom, collapsed. If you'd have taken that long, you'd have stopped out on it. Then you'd have gone and walked the dog. You'd have come back from walking the dog. And you'd have missed that. Oh well, you should have taken the dog out an hour earlier. It's not in your control, is it? When the dog wants to pee. Yeah? Random. It's all random. Anyway, that's done. US dollar CAD just got stopped out on 2 of those positions. So I've taken half of that US dollar CAD off. I've still got those 2 running, which I'm going to leave to run for the rest of today, basically. Euro odds still doing all right. Look. So I've got 0.8. If this gets up to 1%, I'll probably just get out. I'm quite happy to have a break even day on a Friday. So yeah, I'm going to let that run for the rest of the day. We're down at support. Potentially on yesterday's low. If not, we're heading down here. If we get down to ADR today, I shall just take the loss on it. I don't really want to hold it over the weekend, and I don't really want to scale into this US dollar. I might take a new position on it next week down there if it gets down there, but I suspect what we'll probably do today, because it's Friday, is just chop around. I've got no news, so we'll see what happens. DAX, still looking for short opportunities. We're right up in this propulsion gap now. So this really is point of no return for the DAX. If we break this high, we've got a new peak formation low put in. So actually, to be fair, that is the point of no return if we're going to continue bearish market structure. But if we break that high, likely we're going to do that, isn't it? So yeah, really interesting shorts here. But we are at the moment not seeing any signs of bears coming in. Right, I'll leave it there, guys. It's been a long one this morning. But it's always good to go on a ramble every now and again, and if you can take something away that helps, that's what it's all about. Right, I'll let you get on. I will be in the Telegram group if you need me. I'll let you know what's happening with trades. As I say, I'm looking for short opportunities there. Everything else is meh at the moment from an FX perspective. Just not got any movement. So looking to try and make the money out of the DAX this afternoon. So I'll be watching this like a hawk, trying to find an entry. Yeah, I'll let you know. Hey, Profster. Have you just turned up? Or have you been sitting here falling asleep listening to me ramble on? You just turned up, haven't you? You've missed a waffle. Watch the replay and go back about an hour. Hopefully there's some golden nuggets in there today. No problem, Lincoln. I'll be in the Telegram group if you need me. I won't be trading a lot this afternoon. Literally, I'm just going to concentrate on trying to get this DAX short on this morning, and then hopefully New York will drop it. This is my last week from my high school exam. Then I'm done with school. Good man. Then you have to go and get a job. That's not much fun. You wanted to go into banking, didn't you? I think. Didn't you? Hopefully I didn't put you off. The statistics on people making it into the banking industry and actually becoming traders in the banking industry is about the same as the amount of people that make it in a prop firm and actually get paid out after a month. It's like 2 out of 5,000. It's ridiculously low. The ones that actually get into the jobs that actually pay you the money that you want to earn, that is, obviously, there's lots of jobs in banking, but the ones that actually make you the Ferrari money, yeah, not many. I know one. God, did he have to fight for his job every day of his life. Just think, if you're a banker, if you're in a trading finance, if you're in a trading firm, and you don't perform for a month, how many thousand people below you do you think there are snapping at your heels showing your boss their P&L? Yeah, their P&L is better than your P&L. Do you think the bank's interested in who made the P&L? No. Yeah, you can come and work for me. Not that I have any jobs or a company, but you can come and work for me. I don't pay much. Don't pay anything. I haven't got any jobs. I make my own money. Just come and watch me. It will sink in eventually. It always does. It either sinks in or you don't make it. I think I've probably said this before as well, before I go. All the people, I've had many mentors in my life, and through mentorship with people, you make friends while you're being mentored, of the people that are being mentored alongside you. And I don't know any of them anymore. None of them are trading anymore. Well, not that I know of. And I have reached out to them, never heard anything back. So you have to assume that they've given up. The 95%. No, I think that's high, to be honest. I think that's low. I think it's probably more like 98%. But yeah. Anyway, I'll let you get on. Anything you need, let me know. I'll be in the Telegram group. Watching this 141 level. I haven't got it on this one. 141. Basically, we are there. So watching this area like a hawk. This is a retest of the reversal alert. So looking for a lower high to form here. So we haven't got a lot of room. ADR, somewhere between here and ADR is it. So the option you also have here is, if you wanted to, you can scale in to a short. So measure this. 1,270. So let's say 1,400. Give it a bit of room. Yeah. What you can do is you can scale in. Whoa. Okay, so get in with smaller positions. Take one, try it. If it doesn't work, wait for the next one. Take another one. Doesn't work, wait for another one. Take another one. I've got 0.75 risk. I'm going to have less than 0.75 risk with a stop above ADR high. If I'm right, and we're going to come down and we're going to do this, I'm going to hold these small positions down to here. So it's an intraday position trade. We've had a really good strong push. So this is another good strategy to use when you've got a push like you've got here. Whoops, on the daily chart. Yeah, I was looking for a 50% retracement test of this level. We're way beyond that now. Yeah, so scaling in here with a view to them double topping below ADR. Even if we just pull back, you're going to get out. So there is a new EA for indices, Profster. Are you talking about this? This is the price action toolkit, basically. I just built an EA to get in and out of trades, scalp, which draws price action patterns. It's just buttons. At the end of the day, it is an EA, but it's again, you don't want to be 100% auto trading with it. We tapped directly into that and rejected. So I think that's what I'm going to do actually. Rather than getting big, I've got a bigger position here. So what I'm going to do is I'm going to add small positions in. I'm going to see what happens if we bounce off of this level and we trigger that and we get a reversal. I'm going to enter my first big position under these lows, and then I will scale in with larger positions. If we push up into this zone here, I will take multiple, probably another 3 small positions with a 0.25% risk, but I will be out of the lot above ADR, because if we crack ADR today, we've cracked these highs. If we crack these highs, we're on our way to 125 ADR. That would be your ultimate stop really today, but it's going to take a hell of a move to get to 125 ADR today. Indices struggle with ADR. The vast majority of the time you stay within an ADR. You get the odd day where we get an ADR hit, but the vast majority of the time we are within ADR. So no, the one I just showed. Oh no, that's just a thing I'm playing with. It's just testing strike rate. But yeah, I mean, if you want to, it makes profit. This is, again, I don't want to keep going on because I wouldn't let you go. But all these EAs you see on the marketplace, that they show you these beautiful graphs there. This thing's going to make over $60,000 in a month, over $13,000 in a month. Yeah, we started on a 50k balance. This is going to go up to something like 63 in a minute. I'll wait for it to get there. Come on, you did a minute ago. It was 200. It took 200 trades, didn't it? I think. There we go. Nice little profit. That bang. Right. I'll stop it at 134 trades. I'll take a screenshot of this, stick it up as an EA, and I'll flog it for $99. Yeah. Is this going to make you money? No. Not long term. Does it look good? Yeah. I've stopped it at the wrong time. But this is what you see. The vast majority of the EAs you see are curve fit. I can curve fit this by changing that figure and let's go with that, something like that, and testing that up to 300%. Yeah, if I run that in the optimization, I will get an EA out that over that period of time makes me profit, and I can post that, but it's not going to work going forward. All I've done is I've found the optimal settings between those dates to make money with the EA that I've built. And this EA took me, I don't know, an hour, half an hour to build. There's so much of this dumped on the marketplace, and it's so easy to do. Haven't got any profitable settings yet. Not even sure it's actually started running. I think it's just accumulating data at the minute. But you know, that has no bearing on what is going to happen from 2021 onwards. So whatever settings I get out of here to make the maximum amount of profit or get the lowest amount of drawdown, and this is what you're seeing at the moment, loads of EAs that promise below 5% drawdown. Why is the market flooded with those at the moment? Because what's the FTMO max drawdown? 5% or 10, whatever it is. Yeah, that's all you're seeing at the moment. Prop firm EAs. The best way to trade is out of levels, price action, market structure. Exactly, totally naked. We've got one result. It was a fail. This is going to run now, but yeah, it will. I haven't put enough variables in there to actually probably get a result, but you know, it'll get. I can curve fit this over that period of time to make money, no problem. But but that's what the indicator is built for. My indicators are built for. This one specifically, market structure, is just to help people identify it. Yeah, and you're totally right. Trading with a naked chart is the best way to trade if you can identify market structure breaks and price action. But a lot of people were starting out, even in the first 2 to 3 years, it's quite hard to get your head around this lot. This thing just shows you when it happens. It's just that's, but you know, I don't need it because I've been seeing it for such a long time, but that's what it does. It just shows you visually. But the best way, as you say, is naked charts, because you can see stuff. I hate cluttered charts. Still hasn't found any profitable ones. It's going to fail me now, isn't it? But I've only set up 6 tests. That's not enough. Should have about 1,000 tests. But anyway, you get the point. If I'd have changed these figures to be something else, then it would have worked. But anyway, yeah, I didn't find any. Right, I'll stop waffling. I'm going. Yeah, watching this, we've got a rejection there. Look, sellers are starting to come in now. I'm going to take a short on my funded, very tight stop. See if we can get this move. All indicators are beginner friendly. That's what beginners need. Yeah. You know, it does work. It works. But like I say, it's going to fail a lot. But it's going to work a lot. I think the best lesson with this indicator, to be honest, is when people say to me, it keeps repainting. Light bulb moment, the market keeps moving. And half the time, it's wrong. Light bulb moment. Anyway, I'll be in the Telegram group if you need me. I'll be back on Monday, 7:50 usual time. We'll obviously go through full market overview, look at every single pair, look at where we got last week, look at the news ahead. I just quick recap of news before I disappear. I don't think we've got anything. We've got the elections. I'm not really going to do anything financially. But next week we've got PMIs and we've got New Zealand dollar. We've got massive circles. We've got loads of news. So we'll have a look at the news next week. There's quite a bit of it. But yeah, hopefully we'll have some more price action next week. More steadily spread out. This week was a bit top heavy at the beginning of the week, and unfortunately everything I got into has just gone sideways. So Never mind. In one, short, with that massive stop on. So this is a position. So either I'm going to jump in, add, and get out, or I'm going to be dragged into a little bit of DD, and I will get into a few more up there. But I'm going to manage this. I think we're in a really good spot up here for shorts now. Big strong day, big strong push. Looking for one of these. That's what I'm looking for this afternoon. Okay, have a good one, guys. I will see you on Monday, and see you in the Telegram group if you need me. Have a good one.